Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. Today I got a email that I want to review from Mark Moss. If you're not familiar with Mark Moss, he's what's a short, quick summary? I guess you'd call him a Bitcoin venture capital investor, and he's also the chief visionary officer at Matador. And that's a pioneering public Bitcoin company. So Bitcoin Maxi would be a great way to describe him. And he's definitely big on sharing investment knowledge and things of that nature. He's built multiple 7-8 figure businesses, investment portfolios, yada, yada, yada. So I've watched a few of his videos, and he does definitely back things up with data. And I'm not playing a video this time, but I got this email from him. Newsletter, I should say. I didn't get an email from him. This is a newsletter. Everybody got this. That's subscribed. And he's talking about this 50-year cycle and the biggest wealth explosion in history, where he's talking about historically what happened with Intel, Apple, Microsoft. These are all tech companies, and how every 50 years, like clockwork, it happens again. And he breaks this down. He's calling it the 4-phase quantum wave cycle. Phase 1 is the eruption in technology. Phase 2 is the surge. Big money enters, institutions flood with massive capital. Phase 3, maturation. Technology enters everyday life, returns diminish. And 4 is the decline, where cycle ends and a new phase begins, or new cycle begins. We're in phase 2 right now. And where this actually comes from is the Kondratieff wave, or the K wave. I'm probably pronouncing that wrong, but it's characterized by distinct phases, similar seasons, a period of growth, recovery, and expansion, and a period of decline. So this is coined or been around and looked at for quite some time, looking at different phases of this. And he's basically just tied it specifically to Bitcoin, but it is definitely more akin to using it in, like it says, world economy, tied closely or linked to technology cycles, which Bitcoin clearly is a tech cycle. So there is some validation here. It's not exactly 50 years. It's not a science. It's just roughly 40 to 60. And this also ties into what Ray Dalio is talking about with his turnings. When you look at the average lifespan of a human being, give it about 80 years, every 20, call it 80 to 100, right? So every 20 to 25 years, you enter a different phase in your life. And that ties to this as well. So about 2 phases in a generation, or 2 different generations, that's where you start to get these booms and busts. So these all tie together with demographics and tech development and all these other things. So it makes a lot of sense. So basically, what he's saying here is that BTC has a huge, or we're in the middle of this huge opportunity. Shout out to the opportunity costs. So they're putting everything, every dollar value automatically comes with a BTC value, or SATS value. So it may look confusing to you, but I told you guys about that plugin that I installed. So what he's showing is the opportunity that still exists within Bitcoin. And what he's asking or wants you to think about is like, what's bigger than Bitcoin? And so he says, remember, Intel created the microprocessor. So that was just one thing that they created, but then that spawned multiple industries, software, the internet. So that one thing that was created wasn't as big as the industry that used that thing. And another example is oil, right? So oil trades at $60 to $80 a barrel, but the oil industry, the thing it powers, is 5 trillion. So you think of Bitcoin as this tech advancement, this thing, this microprocessor, or this engine, oil, that is funneling or fueling something much, much, much bigger. And that is also where Michael Saylor's thesis comes in, Jack Mahler's as well. Like, what is the scope? And human beings as a collective own about 400 to 500 trillion dollars worth of stuff. The total addressable market, I guess, with leverage and stuff, is like closer to the quadrillions. But when you just look at stuff, assets, value, paintings, vehicle, whatever, that's like 400 to 500 trillion. So Bitcoin is powering that, or blockchain, I would say, is powering that, because as of right now, tokenizing assets will more than likely not be on Bitcoin on the core layer, maybe on Lightning or something else, maybe with what Cardano is trying to build, where they have this toggle switch to go into DeFi mode and all that. I have no idea. But the point is, there is this massive, massive opportunity. And I ran this through AI to get some additional diagnosis or information on this. So basically this took that email and decided to get a, as it says, a no BS data backed read of the email. And where we are now at the 116K level, ETFs, spot funds show resurgent flows after early August outflows. So that was after the brief crash. We're still kind of in the middle of it, but now it's bouncing back up. Corporate balance sheet, so there are companies holding it. There's a policy backdrop, so fair value accounting has been implemented. We have the Bitcoin Strategic Reserve. We have the Clarity Act going in or trying to get passed, I believe, next month. We have the Genius Act already done. So there's a lot of policy backdrop framework that is behind the scenes. So as this says, phase 2, the flywheel, how this works is spot ETFs, fair value accounting, bank custody, removing friction, RIAs for corporates. So this basically is just saying TLDR is that the price of Bitcoin will have to go higher because the rules that are in place and the companies that want access to this, like the net ETF inflows, outseed the demand of the actual Bitcoin being created or mined and available to be sold by the miners per day. And over here on CoinGlass, we can see the Bitcoin on exchanges continues to trickle down. We're sitting at, where are we at right now? 2.23 million. So I think it'll be a big kind of shock when we break below that 2 million mark, and even lower when we break below 1 million, because then it becomes real. It's like, oh shit, this is actually dwindling. Right now, going from 2.8 to 2.23 doesn't really have this shock and awe. But with companies a la Strategy purchasing another 430 billion worth of Bitcoin, 430 Bitcoin worth 50 million, sorry, that eventually does start to eat away at this supply. And of course, again, people that are hodling, like the whale that sold 80,000, they can go ahead and put theirs back on the market. But I think, again, once we break that 2 million mark, it becomes more real, because you're in the 1 and some change million sitting on exchanges. And that may not be long from here. I have no idea how long that takes, but every little bit coming off of exchanges just creates that shock and awe factor. So the playbook, as it states, is basically DCA weekly. that's the TLDR. Figure out where your allocation is. It's saying 2.2 to 5% is conservative, 5 to 10 moderate, 10 to 20 is aggressive. And as I said, once you understand Bitcoin, you realize that this is impossible. You cannot look yourself in the mirror if you truly understand Bitcoin and then confidently say, well, I understand Bitcoin, I believe in it, I get that the fiat system is a Ponzi scheme and it's going to zero and it's never lasted in human history, but I'm going to go ahead and put 20% into Bitcoin and the other 80% into what you have just identified as the loser. Like, that makes absolutely zero sense. So you're either all in because you fully understand it, or you're dipping your toe in because you don't actually understand it and you still trust the fiat system to some degree, because, as they say, it's the devil you know is better than the devil you don't. So there's a lot of unknown unknowns that I get that a lot of people will not be able to fully commit to Bitcoin in that way. And your lifestyle may not allow you to commit to it. So that's why I packed up all my shit and I ran away about 10 years ago. I saw the writing on the wall, but I didn't start getting 100% into Bitcoin until this year. But I created the moves to unburden myself 10 years ago. So I know that that's not possible for everyone, but Just keep that in mind. So that's the playbook, as it's saying, and paying attention to some additional opportunities like getting leverage BTC via proxy using custodial risk with strategy or meta planet. So the playbook, the writing is on the wall showing you where things are going. And there are some bull catalysts for mega inflows with additional corporate treasuries. I showed you guys this before. Let's pull that up again. I think we have like just over 222 treasury companies. And this was like 160 a couple months ago. So this literally ties directly into what I just stated about this 2 to 5%. Companies are waking up going, wait a minute, bonds are garbage and I have nowhere else to store my capital. The exact same process that strategy went through. And once they start waking up, they have access to way more money. One, on their balance sheet. Two, by ways of being able to leverage their corporate debt or to get funding, get loans because of just how massive they are. So this will continue to grow. And as that grows, just them taking 1% of their balance sheet, 0.5%, it's typically more than the average wage earner can DCA. So this goes right back to this supply shock. It's going to become real. When that takes place, I have no idea, but you have an opportunity right now with the volatility still in Bitcoin and people thinking they're outsmarting it by shorting and going long and, you know, getting wrecked along the way. You still have this opportunity to accumulate it. As the old saying goes, you get Bitcoin at the price you deserve. And there is a deserving opportunity right now for many, albeit maybe more expensive than you would like. And you might be one of those also on the sidelines, hoping that you'll be able to get it at 70, 80, 90, whatever. I don't believe that's actually coming back ever. I could be wrong, but that's why you just DCA daily, weekly, monthly, semi-annually, whatever. Because this will continue to grow. Like, this is just a logical step to companies that are already investing in things like S&P 500 or specifically the Mag 7 or treasury bonds, right? So it's like, okay, Leah, let's go ahead now that BlackRock and all this stuff has given the green light. Let's take what we were already investing and just put a small percentage into Bitcoin. So they're already familiar with risk analysis and portfolio allocations. So this just is a no-brainer that this will continue to grow, and it's going to grow at a rate of ripping BTC off exchanges faster than any individual can acquire it for themselves. And when you look at this, countries, public companies, like, it should be a no-brainer for you to try to get your hands on this. All these make up this 222. And I'm gonna have to come back and visit this. This is I wish I would have went this before to see, but I know it was like 160, 150 earlier this year. So right now, as of middle of August, 222, this will be interesting to check back on by the end of the year, how much has grown and how much of this has been absorbed. That is crazy. All right. Hope that gave you some value, some insight, some clarity, some directional path finding for what you should be doing or at least looking at. Because if you're sleeping on this, like the last video I made with Ralph Powell, you're going to fuck this up. You're going to miss this opportunity. And the best thing you can do is just dollar cost average, set it and forget it, and at least be able to secure a piece of this limited supply, foundational new piece of the financial system. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See you.